Thanks so much, sir, for joining in. The stock's higher in today's trading session. Financials haven't been great in the last 1 year. So is something new happening? Do you have a bit of a turnaround that's taking place? Some kind of a guidance? How's FY18 going to look like?
Good morning.
Morning.
Thanks for calling me on your
Pleasure,
show.
sir. Yeah.
I think so. It's a lot to do about the ongoing monsoons, changing consumer demand, post-demonetization and GST, where we expect to see a much bigger jump in consumer demand all across the country. Plus, GST is going to be a big help because it's been a very positive thing for the cotton chain.
Fantastic.
And the gap, the organized sector is going to gain against the unorganized sector.
Absolutely.
Due to this new development in a very big way.
So, Mr. Jain, if I had to ask you, what kind of a revenue growth can you do for this fiscal, given that you've already given me so many positives? Last year, you did a degrowth of 3%. This year, are we looking at a growth? And in terms of margins, last year we saw a bit of compression. We had around 5.5% in terms of margins. Can we look to up that?
Last year was an aberration because cotton prices in India went up by about 50% in just a gap of 2 to 3 months, while international prices were almost flat. So that created a big issue and business was really down. And plus we had the demonetization bump where sales were really down for about a couple of months, and still they are almost coming at norm, but it's still taking some time to see a growth. So that last year was definitely a bad year. But seeing things now, we don't see any bumps ahead. We see a lot of positivity. And yes, revenue would grow. I would not like to give a figure at this point of time. But definitely revenue, margins, everything are going to be positive going ahead in this year.
Right, Mr. Jain, in that case, if you could tell us a little about the company's revenue profile. You know, you guys are into yarn, innerwear as well as casual wear. What exactly is the revenue breakup and what is the margin breakup of all these segments?
Well, our innerwear today constitutes about, actually it's no more innerwear. It's innerwear plus casual garments. We have diversified into casual garments.
How much does that contribute to your revenue, sir?
That contributes about 25% of our revenue. And the balance comes from yarn fabric. However, we are consciously focusing now, not only since last 2 years, on our garmenting business. And that's where we are investing and growing. We don't envisage any new investments in our yarn business in the next 2 to 3 years.
Oh, that's great news, Mr. Jain. You know, we had one of your competitors, Lux yesterday, who joined us. They said that their average realization is $55 per piece. What is your average realization? And sir, you also told us that, you know, you're not going to be putting more money, no more capex. Your debt is at around, what, 250, 260 crores, 270 crores? What is it, sir? And will you look to pull down that debt now?
Yes, definitely. Our debt is getting repaid. Most of it is now working capital debt and not so much of long-term debt. And that's getting repaid every year. And if we are not looking at any big investments, because spinning is capital intensive.
So what is the debt, sir, and how much can it, what can it look like by the end of this fiscal?
Our debt would come down by another about 25 crores over this fiscal.
10% lower.
Yeah, it would come because most of it is working capital, and as we are growing, that portion of debt would stay intact. The long-term debt would keep coming down over the next 3-4 years, and it would be fully repaid. And regarding the average realization, our average realization is about today about 60 to 70 rupees a piece. But it's slowly moving up because we are moving more into value-added garments, and we have also introduced a new brand called High Flyers last year, where we are now trying to build our garment portfolio.
Right. So you spoke about a lot of levers as far as revenue, margins and the finance expense coming down. So on the bottom line, what can you do? Last year was absolutely flat, that too aided by some tax credit, 2.15 crores is what you did. What can we expect in FY17, 18 and 19?
Well, I can just say it will definitely be better than last year, much better. I won't like to put a figure. It's too early in the year to put a figure.
All right. So thanks a lot for joining in. We wish you good luck.